Welcome. It's the midweek edition of Business Morning live on Channels Television. Great to have you join us. I'm Ladi Williams. First off, let's take a look at what's happening with oil prices there. Prices climbed today towards last week's 7-year high as a draw in U.S. crude stocks confirmed strong demand and tight supplies. But investors remain cautious ahead of an OPEC Plus meeting later in the day. Brent crude rose 11 cents to $89.27 a barrel after easing to 10 cents on Tuesday. U.S. West Texas Intermediate crude was up 14 cents to about $88.34 a barrel, having gained about 5 cents on the previous day. We'll see tight global supplies and geopolitical tensions in Eastern Europe and the Middle East have boosted oil prices by about 15% so far this year. Friday, crude benchmarks hit their highest prices since October 2014, with Brent touching $91.70 and U.S. crude hitting $88.84. Not looking bad in that market right now. All right, back here. The currency in circulation in Nigeria rose by 1.15 trillion naira in 2021 to 3.33 trillion as of December 2021, its highest level on record. You see, credit to private sector hit its highest level in December 2021, reaching 35.73 trillion, or about 30.15 trillion recorded as of December 2020, representing a 5.58 trillion naira increase in 1 year. Let's analyze these numbers now with Mr. Paul Alaje, senior economist, SBM Professionals. Good morning. Great to have you.
Good. Thanks very much for having me.
Yeah, so we see Naira in circulation, has been on a steady rise since 2016. What's stoking this?
Well, a number of things are responsible for increase in money supply, and I can attribute three major reasons to the increase in money supply. One of the reasons remains the Monetary Policy Committee has reduced policy interest rate (MPR) and has left it at 11.5%. That decision had made private sector credit to increase significantly. Private sector credit has grew to 35.73 trillion from 30.15 trillion. That's an increase with about 5.58 trillion. Again, we have also seen some intervention by central banks, and of course, it's quite a number of them, but not limited to what you may want to call the 75.99 billion naira support for cultivation of different agri programs, especially the plantation of crops or seeds, which include rice, wheat, and of course maize. So we see quite a number of decisions that have been taken by the Central Bank of Nigeria and also the Monetary Policy Committee in order for us to have significant growth. And the question is, has this yielded the result that Central Bank was looking for in one hand, even though this had a trade-off effect or trade-off impact on the economy? I would say yes, because when you look at GDP growth rate in Q2 and Q3, because that in 2020, Nigeria was in a recession, no thanks to COVID-19, but in 2021, in second quarter, GDP growth rate went to about 5%. And third quarter, which is still the report or the result we have, according to the National Bureau of Statistics, with about 4% GDP growth rate. It's not limited to that. We have also seen credit even to government sector and increased significantly. It has increased from 12.4 trillion to 13.73 trillion. So all of these had impact, of course, on the economy. And that, I think, may be the reason why we have seen this significant increase in money in circulation to about 33.3 trillion as of December 2021.
Right. And, I guess it's safe to say this is why we have a double-digit inflation. Should we be worried here?
Yeah, we should. We should be worried in the real sense. We should be worried because when you look at double-digit inflation, money supply is a major driver of inflation, even though we have also seen activity of central bank, which includes open market operation in order to reduce money in circulation. But we also look at quality of money, which is the argument most economists don't talk about. The quality of money or the quality of Naira, I beg your pardon, has significantly been emaciated. No thanks to inflation, of course, in double digit on one hand, and also you may also want to look at what exchange rate is saying. So the truth is that you still need to buy a bag of rice because of your family size for 1 month. When we say put belts, buy belts, and we are having austerity measure. But that does not mean you must not eat. You still want to eat, you still want to buy rice. 5 years ago, 6 years ago, 7 years ago, 8 years ago, a bag of rice was between 15 to 18,000 naira. Today, using the same naira as medium of purchase, you now have a bag of rice for about 30,000 naira. So the demand for money and using the same quantity would increase significantly. So we should be worried. And that in itself is inflation. And that's about 100% in about 5 years. When you look at the average inflation in 5 years, it's about 20%. So we should be worried because inflation is really very evident. And we are also hoping that by 2022, we're going to be seeing reduced inflation. But as at the last report, rather than going down, what we have seen is inflation even increase marginally.
All right, you're looking at some of these fintech companies. You think they've also contributed to this? I see credit from fintechs actually went up.
Fintech has contributed to increase in credit, especially to the private sector, because it became relatively easy for people to access credit from organized financial sector. Even unorganized financial sector where you have loan sharks, I don't know if you have received call that somebody somewhere has borrowed money and refused to pay
I actually
back.
Received a call like that this morning. I received a call like that this morning.
Okay, so we have seen loan sharks develop every day because of growth in technology. And yeah, so that in itself has improved or increased credit that we have. And when you give credit, it will also increase money supply, because when the individual is paying back, certainly will not pay back the exact amount he gave, he collected, and facility was loan. So it's going to come with interest, if you like.
All right, so, what's the solution here? How do we mop up this excess liquidity without stifling growth?
Well, in economics, is a trade-off. If you increase monetary policy rates on one hand, it is expected that after a long time, you'll be seeing reduced growth. You'll be seeing reduced growth rates. So if you tighten excess, if you tighten NPR from maybe 11.5 back to about 14%, it will definitely have impact on the GDP. So you ask ourselves, what do we want? Do we want reduced growth? And when you have reduced growth, that may have implication on jobs, even though you will see inflation reduce marginally or depending on the results of the policy. So that's on one side. On the second side, do we continue to battle with this inflation and continue to battle with other? I think Nigerian problem is beyond just adjusting NPR. We have fundamental issues with our economy, and this has to be resolved among trade policies and implementation, fiscal policy, especially fiscal authority, beyond paying, contractors. We should tie our fiscal expenditure to growth and to development of the country. And more importantly, we also have significant problem, meaningful problem, and we have quantum problem with our trade policy. We are not exporting enough, and in instances where we are exporting, most of our exports, and there have been implications. Because what is driving money supply also can be traced to the quality of Naira that we have, as I explained earlier.
Yes. All right, Mr. Paul Ali, thank you so much. Senior economist, SBM Professionals, thanks for coming on the program this morning. All right, moving on, I see over 281 companies have benefited from the COVID grant relief under the Export Expansion Facility Program, a scheme under the Nigeria Economic Sustainability Plan of the federal government. It's according to the Executive Director of the Nigerian Export Promotion Council, Mr. Ezra Yaksak, of the formal completion of the program. He adds that about 84 women, a business, and 100 youths have also received different forms of interventions. You take a listen.
This interactive session is to give an update on the implementation of the Export Expansion Facility Program 1 year after a committee was set up for its implementation. The 50 billion Naira program is part of the federal government's 2.3 trillion Naira economic and stability plan. The aim is to protect business from the impact of the COVID-19.
Other interventions under the EAP program included 2,000 farmers were trained in good agricultural practices and food safety standards. 500 women trained in export procedures and they are undergoing mentorship and handholding with various experts across the country. Establishment of or support of 8 domestic export warehouses, establishment of 5 cold storage facilities, among other things.
1 billion naira has been disbursed to people, beneficiaries in the digital services ecosystem. 400 women have been trained in export readiness and supply chain. We have 5 export trade houses coming across in different parts of the world. 1 billion naira has been disbursed to women-owned businesses.
These beneficiaries explain how the program has impacted on their businesses.
This is a scheme that I really hope will not die, because it has, let me give ourselves as an example, where we were able to train about 1,000 businesses on export in 2020. With what we've been able to do with the EAFP, we are going to be able to train about 10,000 businesses this year.
What we had before, we were able to process like a ton in a week. But now, with this EAFP, I can tell you for a fact, if we're able to do 5 tons in a week.
It is during this phase of export trade that we're actually able to make some giant strides, largely as a result of the support of the EAFP program. So I thank them for that, and of course we will not be letting you down.
The council is taking over the monitoring and evaluation of the program going forward.
All right, to our next conversation now. Recently, the AFDB released a report tagged Africa Visa Openness Index, which was first published in 2016. It measures the extent to which African countries are open to visitors from other African countries. The index analyzes each country's visa requirements to show which countries on the continent facilitate travel to their territories. We'll be analyzing the Nigeria's ranking and the expected impact on trade and economic development with Enobong Udo. Right there, joining us from Abuja, lead partner Udo Consulting. Great to have you. Good morning.
Yeah, good morning, Ladi.
Yeah,
How are you?
I'm fine, thank you. Great to have you this morning. Well, it's been said that there are huge potential gains to be had for countries and regions across Africa and having more visa open policies for other African countries. Paint a picture of the economic benefits here.
Yeah, well, with trade travel, you can easily forecast national GDPs, and then you can expect your FDIs to increase. Those are the benefits. Those are basically the fast benefits that we can expect.
All right,
so free trade, the visa policy.
All right, looking at Nigeria's, rank on the index for 2021, we're ranked about 7th position. Also, one of the countries that's progressed the most in West Africa in the last 5 years. Has this translated, in terms of impact?
No, I can't say it has really translated. In fact, I think we have retrogressed because 2020 we were, I think, 5th on the ranking. So we've gone 2 notches down to 7th position. So, but again, if you look at the real sector, our FDI has not really done well, and then mergers and acquisition coming into has not really done well. So we could blame the pandemic for it. So it's fair and square. It's okay. It's not too bad.
All right. Let's look at country income. How does that affect visa openness? See that 17 of the 2021 top countries are low income. And the lower middle income countries, about 5 of 7 of Africa's upper middle income countries have, low visa openness scores. How does this translate?
Yeah, if you look at the data, it could seem as if it's the low income countries that are more open to have more visa open policies. It's not really like that. I think in Africa we have only 3 countries that have open visa policies: the Gambia, the Benin Republic, and the Seychelles Island. I can't ascribe low income or GDP to it. It's a matter of policy. It's a matter of the national policy trying to be proactive to attract FDIs and attract foreign investments. That's it.
All right, talking about policy now, how do you balance openness, and security to facilitate intra-Africa trade and actually boost Nigeria's exports? We actually need that, right now, since our focus is diversifying right now.
Yeah, I think one of the problems we see is the security issue, because if you look at the big countries in Africa, most of them they don't have open visa policy. You see, you need a visa to go to South Africa, you need a visa to go to Egypt and the other big countries, Ethiopia and so on. So we need to streamline our security infrastructure. One way is for countries to have these national identification systems, which clearly Africa has not really done well in it. And then they must be able to communicate, have a database where countries can easily communicate with one another and share information. So that's a problem. So security is a major risk why countries are not open to allowing, open visa policies and so forth. You're right on that point.
All right, so AFCFTA, quite an ambitious, trade arrangement. It forms the largest regional free trade area in the world. With this openness index, now, how can Nigeria take advantage of this bloc?
Well, there are some determinants that we would need to do, some fundamentals we need to take care of. Like I said, number one, you see, another issue is that most countries, they see immigration policy as a revenue-generating area. Like I think 2020, we did about 60-something billion from the immigration service. So most countries see visa policy as a way to get revenue, which shouldn't be, because when you make it a revenue-generating arm or institution, you inhibit a free flow. And now that we have the continental free trade, being ratified by a lot of countries in Africa, you can expect that there will be a lot of issues. I think it's only Rwanda, if I remember, it's only Rwanda that actually ratified the free movements in persons, So how can Nigeria really stand to benefit? We have a lot of groundwork, things to do. Number one, we need to be proactive in our NIN, identification systems. We need to make it robust. We need to be able to share data with a lot of countries to bring up the trust. Countries don't trust one another in Africa. It's easier for you, Lavi, if you have a British passport or you have an American passport, you can easily fly to the 54 countries in Africa than for we here that we carry African passports. So those are the issues. It's about trust. Most countries, we don't trust ourselves in Africa. So the security issue is I think, is a critical one. People don't want, because of FDIs, you allow rogue elements into your border, into your countries. Nobody wants that. So we need to be proactive in security, database systems, this mobile communication. I think we did that, I think 2 years ago or so, where, we're asked to renew our biometrics or the SIM card thing. Those are the kind of database we need to pull, to be able to make sure we benefit from the trade.
All right, very, very quickly now, what do you think about an African Union passport?
Yeah, I think that was launched around 2016 or so. The African International Community, I think they use it, but a lot of immigration services still don't know what it's all about. You understand? Okay. If you turn up with your African passport in some countries, you still will not be allowed in. So there's still issues of streamlining it. And like I said, the key issues, a lot of immigration services, they use this thing as a revenue generating agency. So, you know, they
Right.
clearly
So
know
it's
what
about
needs to be done, but nobody wants
balancing
to.
revenue and all of that. All right. Thank you so much, Nobong Udo, lead partner, E.Udo Consulting. Thank you for coming on the program.
Yeah, thank you very much.
All right, so after the break, AFEX Commodities update is next. Do stay with us. This is Business Morning. And now for AFEX Commodities update. For the week ended 31st January 2022, at the Commodities Exchange, we see recorded a 10% increase in volume traded, going from about 8.2 million to 9.1 million units in the week. Let's bring in Femi Kehinde, our analyst, structuring and origination at AFEX. He has the details. Great to have you. Good morning.
Great to be here.
Yeah, so give us a summary on the performance of commodities on the exchange for the month of January.
Yeah, so for the month of January, just a bit of a background. For the week ended 31st January 2022, we actually saw a significant increase in the level of activities on the exchange in terms of the turnover, the volume traded, and the value traded. For the value traded, we actually saw a 15% increase to close the week at 2.29 billion naira. For the volume traded, we actually saw the execution of 9.1 million contracts, representing a 10% increase week on week. For the number of deals executed on the exchange, we actually saw a 14% increase week on week, as a total of 632 deals were executed this week. For the ACI, we saw a marginal decline of 0.77 week on week, and for the AEI, we saw a marginal increase of 0.88 week on week, closing the week at 195 basis points. In terms of the volume traded across commodities on the exchange, maize continued to account for a significant proportion of the trade, as 7 million contracts of maize were executed this week. However, soybean had a beautiful week, as 1.1 million contracts were executed this week. For sorghum, we actually saw the execution of 905,000 contracts executed this week, while we also saw the trade of paddy rice, cocoa, and cashew on the exchange. In terms of commodities prices, cashew actually experienced the largest surge in terms of commodities prices, followed by soybean and maize. For the week ended 31st January 2022, maize actually closed at 242 Naira per contract, representing a 1.47% increase week on week. Soybean actually closed at 415 Naira per contract, representing a 2.68% increase week on week. Cocoa also increased marginally by 0.56% week on week to close at 1,205 Naira per contract. Cashew experienced a significant surge this week, closing at 578 Naira per contract, representing a 16.37% increase week on week. However, for paddy rice, we saw a decline of 2.88% week on week, as the commodity closed the week at 220 Naira per contract. And for sorghum, we saw a marginal decline of 0.07 week on week, as the commodity closed the week at 239 Naira per contract. Other prices on the exchange remained the same for the reporting week.
All right. Could you give us an update on the performance of soybean in the international market and factors responsible?
Right. So Brazil continued to account for a significant proportion of the global supply of soybean in the international market. As at last week, on CME, the soybean futures, the March soybean futures on CME, which is the most actively traded, actually closed the day at $15.39 per bushel. And this is a significant increase, a 7-month high since what was recorded in June 2021. The major accounting factor for this is as a result of the bad weather conditions experienced in Brazil. Many agencies have continued to revise their estimates for the country's production of the commodities in this case. The bad weather was usually experienced in November and December, which is a very important year in the production of the commodity in the country. And many experts are beginning to price this situation into the commodities pricing, and then these weather conditions are not currently getting better. So it's sort of a bullish market, or a bullish period for soybean in the international market.
Yeah, commodities are looking quite good at this time. All right, thank you for that update, Femi Kende, analyst, structuring and origination, AFEX. Thanks for the update.
Thank you.
All right, still with AFEX, we see Nigeria, like many other countries worldwide, is facing, food insecurity, which has been exacerbated by the COVID-19 global pandemic and its impact on the country's food value chain. The pandemic has thrown agriculture value chains into disarray. With the growing food shortfall, it is more critical than ever to leverage innovative financing tools. Let's bring in Yusuf Ogumbi now, head structuring origination at AFEX. Great to have you. Good morning.
Good morning, Ladi. How are you doing?
I'm doing good. Good to have you. Well, funding is one of the major challenges of the agri space. How is AFEX, asset-backed commercial paper solving this challenge?
Yeah, thank you very much. It's been a tussle to look at the financing numbers for agriculture global in Nigeria. And if you extend that globally, you still have some bit of a challenge looking at the numbers. But then if you then come to what AFEX has been doing, looking at the ABCP, it's been quite interesting. This is the second year the ABCP will be brought on board. And primarily, ABCP is meant to finance the processors to get the commodities they need. And it's so it's like the popular saying, you use a stone to kill two birds, right? If the processor is able to get enough capital to buy the commodities they need, it continues to increase the access to markets that the people on the supply side have. So your farmers, the traders, the people that participate in this ecosystem, this continues to deepen the opportunities they have. So looking at what we've been able to do in the second year running now, we've been able to bring in more processors into the ecosystem. We've been able to provide more financing to them and help them overcome the typical challenge they face in accessing capital, either from the commercial banks or from the capital markets generally. So the ABCP is an innovative structure, allows them to overcome some of these risks elements that investors typically price into the instrument. And that means that if they're able to overcome these risks, investors typically look at such instruments as high yield, high return instruments, and they really like to participate in it.
All right, so the AFEX ABCP is directly targeted at the processors, which could be said to be the demand side. Do you think there's a reflective impact from the ABCP on the supply side too?
Yeah, a lot of impact. Like we all know, economics teaches us that demand is C plus I plus G, which is majorly financing, if you look at the bulk of it. And if these processors have more money to participate in the market, they have more money to buy the commodities they need at the right time. What this means is that more people on the supply side of the market will be able to sell their product. So the commercialization rate that you typically have for most of the commodities in Nigeria below 50% would exceed that 50% because there is now more demand on the demand side to buy these commodities. That's on the one hand. On the other hand, what we've also seen is that because there is increased demand by the processors, they will begin to look for opportunities to get closer to these farmers, and you begin to look at instrument backward integration structures that would allow these farmers integrate with the processors. Because the processors have more money now, they are able to participate in this market, they're able to integrate with the farmers are able to access inputs, and all of this is like a virtual cycle for the for the entire industry. So it's a win-win for everybody. The processor gets the financing they need, and the supply side of the market also gets the requisite demand they need to continue to produce and make money.
All right, Yusuf, give me the numbers here. How much has been raised, and what are the benefits for investors involved?
So we have a 3-year program running currently, approved by the SEC, of about 100 billion naira. Out of this 100 billion naira, we've been able to raise, in the first round, raise about 25 billion naira, 25 to 27 billion naira. And what that has been able to do within the months of November, December, and the early part of January is to allow these processors in this program gives them the opportunity to buy the commodities they need. So if we're looking at a 3-year period of 100 billion, we've done 25 to 27 billion as of today. And then we also have another one opening in some days as well. And that gives investors another set of opportunities to participate in this program.
All right, so, private sector firms have been, identified as having a role to play in assisting, smallholder farmers in meeting growing food demand. So how can we attract more private sector, participants to finance agriculture, just as you're doing that at AFEX with the ABCP?
You see, Ladi, the equation is simple, to be honest, right? Every private sector participant who is looking for the right mix of risk and reward. And if you look at I'm big on private sector participation in instances like this because they are able to allocate capital more efficiently in these kind of situations. And if you're able to balance the risk-reward profile for these private sector participants, they typically look out for these kind of instruments. So you see opportunities to impact lives, social impact, and there's also economic return in this instance. Who doesn't like that? We all like to have this kind of impact on the society. So for me, the private sector requires that right balance of risk and reward to participate in this market. And for us, we are here to help them achieve that, like we are doing with the ABCP, designing the instrument in a risk-proof manner. And we also look forward to participating with more private sector players to participate in this place, to participate in this sector, designing the best instrument to approach some of the problems we have in this sector. At the end, the private sector, like we all know, is probably the best allocator of capital, and they would typically look out for these opportunities to participate in the agriculture sector.
Right. We all want, big returns for our investment. Thank you so much, Yusuf Ogumbi, Head Structuring and Origination at AFEX. Thank you for that. All right, so we'll take a moment now. And for an opening call to the market, we have Anete Edet. Well, Anete, 47K level. I think I'm seeing 50K in view right now.
Good morning, Ladi.
Morning.
I wish I put a wager. Back some few days ago, I told you something about the market hitting, going above the 47,000 level. I think I told you that.
Yeah,
I think I have my market crystal ball.
Yeah, next time, put your money where your mouth is.
Exactly. And I must say, what a way to start the new month of February, because in addition to the 223 billion naira that we gained in Monday's trading session, the last trading day of January, well, the market gained an additional 262 billion naira. Can you believe it? Just within the first 2 days within this week, but starting off a new month, the month of February, up by 1.04%, which translates to that amount I mentioned, 262 billion naira. And of course, that came on the back of sustained interest in MTN Nigeria's share price, which lifted the market on Monday as well as on Tuesday. And of course, take a look at it. All green color there for the sectoral performance, as well as, well, not too good for the activity chart. But when you take a look at the value, MTN and four other, you call them the quintet. I won't mention them, but the quintet. So now to tell us more about the equities market, let's talk to a stockbroker from CSL Securities, Richard Akimoladu. Thank you for joining us, Richard.
Thank you for having me, Anita.
Yes. Okay. Now, Richard, I would say, I would call it a stock of the day, which is MTN Nigeria. So that equities, that stock has been able to lift the market. Just yesterday, I talked about Airtel Africa, which is a telco, the second largest. So what's happening to MTN Nigeria's share price as we speak?
Thank you.
Hello, Richard, can you hear us?
Okay, thank you. Speaking about the market and MTN in particular, over the beginning of the week, we saw the result of MTN coming into the market, and we saw a very stellar performance in their results. Turnover of about 1.6 trillion, up by 22.9%, and profit after tax of about 298 billion, up by 46%, and EPS about 14. And they are coming to the market with a dividend of 8 Naira 57 kobo compared to 590 that they paid last year. Also, the report of the MTN Series 1 offer for sales was also posted to the market yesterday. The offer was oversubscribed, and that is expected, as you have seen the results that the company has been churning out to the market year on year, and the dividend payment history of the company. So the offer was oversubscribed, and to the extent that an additional shares have to be allocated to subscribers. Up about 15% additional shares was allocated to the subscribers. So those are some of the things that are driving the price of MTN and even the market in general. And also, it's good to mention that Seplat was part of the stock that actually lifted this market yesterday. The stock was up by 10%, trading about 865 Naira. And this is, I want to believe, on the back of the increase in the price of crude oil that we're going to see. Now, crude oil is trading above $90 per barrel.
Okay, so I'm glad you mentioned Seplat, because I would have also chosen that as my stock of the day for the start of. Now, MTN has hit, is nearing its 52-week highs. Well, we talked about MTN, but now we have a flurry of earnings hitting the market. How are investors reacting? How is the market reacting to some of these latest earnings results released to investors, released to the market?
So, as you've mentioned, this first quarter is a time for full year result of most of the listed entity, and we've seen a lot of these results coming to the market, and these results are very impressive. If you look across all sectors, we've seen all these companies coming with a very strong top line and even dividend for their investors. So that is the major driver of the market that we are seeing, and we will see this at least over this first quarter of 2022. I want to believe that we're going to see this positive sentiment towards the market for now.
Okay, thank you, Richard, for that wonderful analysis. And then we'll keep our eyes out on local stock market as it sustains its uptrend. So we'll go on a short break and we'll come back to the fixed income markets.
All right, Dite. Well, let's take a quick break now. We'll come back. We'll look at what's happening in the fixed income market. That's in a moment. Just stay with us. Welcome back. We're still drilling down on the markets here. We still have Anyete. Anyete, what's happening in the fixed income space?
Well, Ladi, for the fixed income market, it is still being lackluster. That market for some time is still being in the doldrums, if I will call it like that. Now, this is how it turned out at the close of, it opened February, still with mixed sentiment, albeit in the bearish sentiment. And then, of course, that comes as average yield remains unchanged at 11.5%. Now, most of the concentration was on the 27th of March 2050 paper, which has been dominant for a couple of days now. Total number of deals carried out at that market segment was just 10 at a value of 3.57 billion Naira there. Crossing over to the Treasury bills market, it also was with mixed sentiment. Average yield there was at 4.4%. Now, but when you take a look at the 25th of August 2022 and the 26th of January 2023, the yield there at a discount of 5.42% and 5.25%. Not too much of activity there. Total number of deals for the two of them, just 9. And then flipping over to the open market operations, the average yield there was unchanged at 5.2%. And not much of activity also, total number of deals there. And that comes as there was a total of 102.23 billion OMO inflows into the market. Now, to tell us more about that market, let's talk to a fixed income trader at GT Bank, Chioma Udu. Thank you for joining us, Chioma.
Good morning, Annie. Thank you for having me.
Yeah. Now, the fixed income market is still not too much of activity going on there. Can you bring us up to speed with activities at the moment?
Well, there's a lot of liquidity in the system. The market opened about 348 billion long. Like you rightly said, more inflows came in yesterday. Over 100 billion came into the system. Naturally, you will see the buy side of trades where we see investors try to invest. And it's been a quiet market in the T-bill space, with rate trading, at the range of 5 to 5.3% at the long end of the T-bill curve. And then from the shorts to the mid tenors of T-bill curve, we see rate trading at the average of 4%. For bonds, it's still a quiet market, pockets of buys here and there, especially at the short end as we see investors trying to invest. So basically, there's been a lull in the market, but with pockets of buy because of the liquidity in the system.
Okay, now, so when you talk about liquidity in the market, what do you expect, or what is expected to lift the market? Because, the overnight lending rate has contracted by about 575 basis points yesterday to 2.3%. And then looking at the CBN special bills, not much of activity there. So what do you think can spur investors' appetite for that fixed income market segment?
Well, barring any debit shock in the system, we will expect that the trades will basically be at the right hand, which is basically people trying to invest. Like you rightly said, overnight rates are currently at an average of 2%. We don't see anything going to spur liquidity out of the system. Hopefully, there will be an OMO tomorrow where the central bank offers about 20 to 30 million in that space. Billion in that space. We hope that will also help to spur activity in the market. But overall, we don't see anything leaving, elevating the system except for the retail auction we have at the end of the week, which is on Friday, basically.
Hey, Choma, thank you so much. We'll keep our eyes out for that market, and then I'll hope that it gets a rebound. Oh, so, Ladi, that's it for the markets.
Yes,
I don't know if you can still allow me time to give you more information about another market, the smaller listed securities market.
The equities market is still my, favorite market right now. All right, Nita, thank you so much. All right, let's get on with other markets. Let's see what's happening in the crypto space. We see the market cap there, $1.77 trillion, trying hard to get above the $2 trillion mark. It's up about 0.89% this morning. Volume traded in the total crypto space, $63.49 billion, down 3.20%. Lower volume this morning. Dominance there, still at 41.14%. Price of Bitcoin, $38,331 at 8 a.m. We see Bitcoin extended an increase above the 38,800 resistance zone. It's now struggling near the 39,200 and might, correct a few points as we're seeing this morning. We see it's started a fresh increase from that 35,000 level. Price of Ethereum, $2,752, up about 0.70%. Volume traded in Ethereum, $12.44 billion. We see Ethereum has been on quite a run this week, not looking bad at all. Let's look at the top alts by market cap there. We see BNB there, $381, up about 0.22%. It's trying to get back above $400. Cardano has stayed above the $1 mark. Congrats, Cardano, 2.06% up. Solana back above $100. It's up about 3.48%. And XRP still the laggard on the top alts by market cap. All right, let's bring in Solomon Amunde now. Hello, Solomon.
Good morning, Larry. Good morning.
Good morning, Solomon. Well, quite bullish news yesterday. We see India, they've legalized cryptocurrencies in the country, but there's a catch, 30% tax on digital asset sales. What do you think?
Yeah, I think that's quite high. It's quite high, and it doesn't seem fair to the traders. Why? Because it's almost like you're taking half of what they have made. Well, the good thing is it's tax on profits then made. But even at that, it's still extremely high. I mean, 30% is just 10% short of 50%. So they need to consider that these traders would have spent on data and so many other stuff that they would have invested before going into most of these positions. And they should also look at the timing too. Most times you invest in an asset and you need to wait for 1 year, 2 years, 3 years before you can be in profit. So I think a whole lot is at stake right here. So I would say 8% to at most 12% seems fair for taxing this traders on profits being made.
Or maybe it's because you guys make a lot of profit. You know, you guys keep talking about 100x, 200x, 1000x. So maybe that's why they're charging you so much.
Yeah, that's also true. But most times, if you look at it, let's say it takes me 3 years to make 10x, and you take 300% of my profit. I mean, that's crazy. If I make $50,000 profit and you're taking about $20,000, that or $15,000 basically at 30%, that doesn't seem so fair because I would have invested a whole lot within that time frame of 3 years.
All right. Well, it's supposed to be bullish news, but we see Bitcoin is still, struggling for direction there. It's trading at about $38,331. How are you seeing price action?
Yeah, price action, Bitcoin is extremely bullish, especially based on the news coming from India, and also because Putin of Russia backed cryptocurrency investment, saying that they should look at ways to kind of like monitor what's happening and they shouldn't try to like pass it away, basically. So the news and sentiment around Bitcoin seems extremely bullish this week. February looks very, very bullish. But for me, I'm still short. I'm short because I'm still looking at we going down to retest probably $37,000. So I'm actually short. But should we break above $9,800, then I'm bullish. So, but right now, I'm short.
Okay. What about altcoins? How are you trading those?
Altcoins haven't peaked yet. I mean, altcoins are still looking very bearish. Right now, Bitcoin dominance is climbing. Bitcoin dominance is looking bullish. And if Bitcoin should dump within this week and next week, it will be very crazy for us. Most of us will lose about 10 to 20% of their value. So I pray Bitcoin doesn't dump, or what the chart is showing is we might likely see a retest of $6,000.
All right. So, Solomon, I'm going to bring your attention to one altcoin that's been acting like a stable coin. It's XRP. I know they have a lot of fans out there, but it seems it's stuck.
Yeah. One thing about cryptocurrencies is every project will get to a point where it will seem like they have hit their peak in terms of market valuation, and they wouldn't really move that much. SRP is one of such projects. It will be very difficult for us to see SRP do a 2x. Like, it will be extremely difficult. We have so many projects like that in the past. Litecoin, ARK, especially ARK, ERK. ARK has been stuck at a particular price for the last 3 years or thereabouts. So it's the same thing that SRP is experiencing, that there are so many other currencies. And this will also be the future of so many other cryptocurrencies too. You would see them get to a market valuation where they wouldn't really grow that much, including Bitcoin. It wouldn't grow that much and it wouldn't fall that much.
Quite interesting, seeing some altcoins turning into stable coins. All right, Solomon, thank you so much. All right, now let's look at the top 5 again. As we see Leo's topping that counter there. It's $4.39, up about 17.44%. And Ethereum Classic, that's where Ethereum is forked from there. It's on the top gainers list. It's been a while I've seen that one. $27.98, up about 9.03%. We see Quant, $104, up about 8.87%. And Kasama, $174, up about 8.52%. Render token there, one of the new entries to the top hundreds, showing up on the gainers list for some time now. It's $3.77, up about 7.43%. And the top 5 losers now, we see Loopring, they're down 7.20%. It did get above the dollar level, but had a pullback with this volatile market we're having right now. And we see Kadena there, $5.94, down about 3.38%. So it's not looking bad at the losers counter there. We don't see double digits this morning. All right, that's it for the crypto market right now. Well, that's a wrap on the program. Also, thank you for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye-bye.